Hello everyone. So good afternoon everyone. Thank you for joining us during your lunchtime for our panel discussion webinar that's hosted today by Moonstake as we discuss the institutional digital asset trend for 2021. I'm Roy from DeFi and I'll be your MC and moderator for today. And having me today, there are panelists from Moonstake, Onchain custodian, as well as Ruby Capital. And we'll be sharing some thoughts and insights on the key trends of digital assets in the year 2021. And opening the floor up for a quick Q&A session later, so please feel free to send any question our way. So now, without further ado, I'd like to introduce the CEO of Moonstake, Mr. Lawrence Lin. Mr. Lawrence, please.
Hello everyone, so thank you for joining us for this webinar. Very happy that there's so many people here that's willing to learn about institutional asset trends at the comfort of wherever you are during lunchtime. That's the reality of this year. So I'm the CEO at Moonstake.io. We provide B2C and B2B staking solution and wallet solution also. So currently we have about 90 million US dollar worth of cryptocurrencies or digital assets staked in our platform. We also about close to 10,000 users using our wallet solution. So for more updates and for information about us, you can follow us on Twitter at Moonstake or go to our website at moonstake.io. So I'll pass the baton to Al from Onchain custodian. Al?
Hi, good afternoon, everybody. I'm Al, CEO and co-founder of Onchain Custodian. We've been around for 2 years, serving the digital asset space as infrastructure wallet provider, really dealing with institutional and sophisticated investors. And we saw the trend 2 years ago that institution, in order to come to this space, will really need infrastructure to be there, ready for them, as well as regulatory clarity. So that's happening this year. We're seeing MicroStrategy coming into the market with more than $500 million invested and issuing more for 650 million more for investors to come into the market. Clearly, infrastructure is very important for such institutions, and we're here to support FIs, institutions, and again, sophisticated investors with their needs beyond just custody and additional financial services, including lending, borrowing, and stuff like that. So really excited to be part of the panel today to discuss with you guys about the trends for 2021. I'll hand it back to the team and as well as PJ to take it on.
Yeah, hello. Thank you, Al, for the introduction. So basically, thank you, everyone, for attending this panel. Also, very great honor to be here with Moonstake to share with my thoughts. So I'm Pan Jun. I'm from Ruby Capital. So Ruby Capital was set up last year. Then we started investing in the crypto space. So starting from this year, we've been focusing a lot on the decentralized finance, so-called DeFi area. So I've been investing into Serum, StarFi, Ulinet. So a few DeFi projects is our portfolio. So really great to share more about how we see institution into DeFi space and well to see how actually to say Moonstake, how can Moonstake in this space. Yeah, thank you so much. That's all from me.
Awesome. Thank you so much, guys. So let's kickstart our panel discussion for today, shall we? So let's jump on the performance of crypto during this pandemic. So number one question I have in mind. So how has the bull market affected investment sentiments? And what are the trends for high net worth individuals and institutional investors to look out for in 2021? So Al, would you like to take the lead on this?
Yeah, definitely. And we're very close to the high net worth institutional investors. So happy to take the lead on this one. So rather than how the bull market has affected sentiment, we actually see it as the other way around. We actually see investors coming into the market, very clearly institutional types of investors, not just MicroStrategy. We've seen Square coming in, we've seen Stonebridge coming in. These are just the disclosed ones, right? And if you account all of these disclosed ones, including what we've seen with products like Grayscale, yesterday just announcing, I think they've crossed into $13 billion worth of investments. So we're looking at nearly about $15 billion worth of investments, just the disclosed ones in this market. And those, along with news like major institutions like PayPal now supporting the use of crypto and being able to buy and sell those digital assets, are what actually driving the sentiments towards a very bullish market. And people are looking at it that this bull run is sort of different from what we've seen back in 2017, where it's very much driven by certain projects as well as retail interests. This is really institutions coming to this space. We haven't yet seen sort of what we would call the FOMO situation among retails, but we're definitely seeing a lot more institutions and sophisticated investors coming to this space or at least asking about how can they invest in Bitcoin, what's the thesis behind that, and along with that, they'll definitely require service provider like ourselves and other players in the market to support their needs in this space. And as a lender in the market and borrower in the market, what we're seeing right now is a trend that there is an excessive supply of, let's say, Bitcoin. That also means that most of the holders of Bitcoin are actually long Bitcoin. And in that situation, clearly, deploying those assets would garner you less yield in the market. But you clearly get the sense that both events in the market, institutional participation is actually driving and leading to this bull market sentiment.
Awesome. So how about PJ, as an investor yourself, what do you think about it?
Yeah, I think for this year actually is quite, I would say from my observation, is quite different from the previous bull run. So if you look back about beginning of this year, let's say everybody remember 12th March. So which is that the Bitcoin suddenly dropped to around $3,800. At that time, I mean, all the people around me, the first reaction is that, okay, the crypto is dead. So people are cashing out. I see so many famous investors, they're cashing out. They lost their quite some Bitcoin holdings. Then from March, actually, we don't really see a main crypto space really uptrending. So let's see, Ethereum is still at around $200. For Bitcoins, it's still around $4,000 to $5,000. But then we see the boom is really in the decentralized finance area. So we see the TVL, total value locked by DeFi pulse, has been increased more than 10 times within the 3 months. So from March to June, I would say it's mainly driven by a DeFi side of the market. And then I think from July to September, then we see the Bitcoin starting to ride the wave, So basically then Bitcoins and Ethereum, I mean, as just Al described, we see Grayscale has been a great, investment trust to drive the market up. Although we don't see many, retail traders formal into the space, but we do see that institutions have higher demand. Actually, another reference we can take a look is about Three Arrows Capital, which is based in Singapore. I think they are the second or third largest holder for the Grayscale shares. You can see the AUM holding has been increased significantly in the past few months. Then in September, that we see another trend that, I think in this year it's quite interesting to see that for the main leading crypto tokens are not the past big projects like Nevros or ADA, Cardano or any other token. It's more like, community projects, Sushi, RV, Land. So we see something is quite different. Even till end of this, as of this moment, people are still expecting Bitcoin whether we break up the 20K, the ceiling. So to summarize that, this market, we don't see, again, I agree with Al, is that we don't see the retail has been driving up this market, but we see institution has been a very strong support. So which means once institution is still there, they have they're relatively longer investment horizon. So we don't see the price will suddenly drop. That's what my feeling. But I still wondering that whether we will see a more above 20K Bitcoin soon or not.
Yeah, I think speaking of significant increase, we do have also a significant increase in our attendee from 23 to 41 right now. So I'm sure all of them are tuning in right now to hear from veterans like you guys. So next up, speaking of, the recent crypto space, right, with more and more people coming in, we do see that there is also an increase in governments coming in, right? So question number 2, so what are some of your opinion about geopolitical tension and government policies affecting the crypto space? Since we are seeing, there's some significant increase in terms of policies, in terms of governments coming in. So what are some of your thoughts, Al, since you are, one of the leaders in this space?
Yeah, again, from an institutional perspective, right? So the idea here is this: when we look at a specific project like RVA, Uniswap Land, right? That's a micro analysis, right, from project basis. But when you talk about institutions, they tend to go for macro as well. So what is the big environment? What are the regulations and the sovereign powers playing in this area? So the one key trend that we're seeing this year or coming to end of this year is really the tension between China and US hasn't died down. There is still that geopolitical tension there. And again, you can see them playing out the CBDC, it may be on blockchain, it may not be, but the idea is people are recognizing or sovereign powers are recognizing that digital currency has tremendous potential for future, and it could impact how their existing fiat system or financial systems is operating, right? And that kind of implication would be result on something that will affect their monetary policies or systems right now. So what you can actually see, or what we've been seeing, is really sovereign powers rushing to get their own digital currency out in the market, and then putting in place the right type of regulations or regulatory regime to sort of safeguard their financial systems against a more private sector type of crypto asset, like Bitcoins and stuff like that. So with this rush, it's really exacerbating the development in the crypto space. And we believe into 2021 and the years forward, we'll continue to see this rush to get digital currency out there to sort of keep crypto assets within certain countries' jurisdiction, because the more asset you have there, you sort of have companies and investors who will then be able to generate a kind of margin and returns as well within the country. And if you think about a sovereign country, what we want is, of course, taxation systems, right? So you're probably able to generate tax out of that, which is a natural, a national budget revenue for the government itself. So there are a lot of things in play here, which will really exacerbate the development of crypto space. And likewise, if you think about grayscale product, it could be taught as one of the things that actually is a trust setup in US, but will help to keep stuff like Bitcoin and other types of asset within US itself.
I see. Thank you for sharing. So, Lawrence, what are some of your thoughts on this?
Right. So firstly, I'd like to, as a so-called expert in this industry for almost 5 years, I'd like to apologize to the world. I think, even though COVID-19 has impacted the whole world and everyone suffer, unfortunately or fortunately, the crypto or blockchain space have surged because of this COVID-19. And I think the geopolitical tension and government policies will tighten further, especially because there's a lot of institutions coming in. There's a lot of DeFi projects with FOMO that might happen in Q1. A very clear example is even for Singapore, the Payment Service Act, they published amendments in November. And these amendments are actually very conclusive and include even the DeFi portion. They even give MAS more powers to chase after blockchain or crypto companies to ensure that the users are safe. And this is a good direction. It just means that for companies like us, or for institutions like exchanges, to crypto funds, to custodians, to projects, do you want to be regulated? For Moonstake, definitely we feel that being regulated will give confidence to users and also will have make the industry more stable. And that's why for us, that's why we feel our proposition of staking as a service and wallet solution as a vendor to institutions will be a very good proposition. So that for companies, you can just focus on your main objectives while leaving the staking or wallet side to experts like us. Yeah.
Awesome. Thank you for sharing. Yeah. So speaking about participation from institution, Lawrence, can you share with us a little bit more? Like, what's the participation from institution to decentralized finance recently?
So I think it has been a very tough learning curve for institutions or even for traditional companies. Like even when I speak to my friends or network this year, when I say I'm the blockchain or crypto space, they immediately give me that look like, are you going to sell me anything? Are you going to sell me Bitcoin? Like, they have the, oh, this is a scammer sort of feel, which I'm not, by the way. We are really quite legit.
Definitely.
So, and when I talk to, traders, who, companies with CMS license, they understand, they love it because, this year, the reason why the surge in DeFi, the reason why the surge in Bitcoin is because this year, definitely, if you want to get profits, you should go into cryptocurrency, you should go into blockchain. It's performing better than gold. Even Pornhub, even with Visa and MasterCard displaying their partnerships, they are utilizing crypto for payment. So there's a lot of use cases that will happen, and it will happen even further in 2021. And for DeFi, it's like they don't even understand Bitcoin, they don't even understand Ethereum, and then suddenly there's DeFi, there's yield farming, there's loans, etc., very complex financial products. I feel the pain for them, and that's why I also have a lot of traditional companies approaching me, talking about how can we leverage on staking, how can we leverage on wallet, because they want to leverage on the experts, and that's why we are here. My only advice to institutions whose board members or even upper management mandate to you is go into crypto, go into DeFi, is take your time, because it is really very complex. The product itself is very complex, but also the project itself, the nature of decentralized, it means it's a high risk investment. So unfortunately, you do need to do further due diligence.
I think definitely. I think speaking of basically doing due diligence and also taking careful research before going in, right? I think it'll be best to speak to the experts. Guys, today if you have any, we have a Q&A session later, so feel free to write down any questions you have. The experts here, the three of them, me myself, I'm not an expert, but the three of them are experts. They can answer your questions. So
I just wanted to echo on one point that Lawrence mentioned, which is the gap in the market for institutions. So right now we're at the stage where they're very keen on crypto asset. I mean, the more traditional ones, they're looking at Bitcoin and stuff like that. So there is still a stretch for them to understand what DeFi is, how does Aave Uniswap works, how do they actually make money is the question that they don't even understand, right? So there's really this gap. But I think I won't call myself visionary, but as people who are sort of driving this industry forward, I think if we look 5 years down the road, what I believe will happen is there will be a need for institutions to trust even centralized entities like a custodian to look at smart contracts and how they actually work, and trust a centralized entity like custodians to deal with the smart contract setup, a wallet interaction with smart contract. That will be probably the way that institutions will go forward. And I'm talking about more traditional ones, right? Certainly not Ruby Capital, who's very familiar with this space. They're really going, for that kind of investment, but more traditional institutional funds as well as family offices. They will probably still need centralized entities to deal with the smart contract, interaction with smart contract, and someone to manage the private key. That's what I see going 5 years forward with institutions.
Okay. So speaking of institutions, now next question will be, what is the gateway for institution? For example, is it Grayscale Trust products or through Moonstake maybe? Yeah. So what are some of your thoughts, Lawrence?
So for institutions to join, definitely they should try to approach the experts. We have even this webinar, we have a cascading solution, we have a venture fund who has been in this industry for a few years. For myself, for Moonstake, we provide staking as a service. So there's two folds here. One is as a technical vendor. Let's say if you are a company that wants to get regulated in Singapore, you want to focus on your main objective, you can always leverage on us as a vendor to give you technical advice, and you can leverage on our platform. And in that way, it streamlines your operations, your cost is lower, and you can get things done faster because this industry is so fast. The other way is, of course, this industry is niche, and it can get very fast and complex. So it's always good to have expert partners like Punjing, which is here, Al, which is here, which you can get advice from. And that's why we are very excited at this webinar and to hear from the other two speakers.
Yep. So what do you think, Onchain?
Yeah, I think definitely agree with Lawrence. Also just now when Al mentioned that, what's the participation for the institution to the crypto space? I think initially they still need to rely on the centralized channel, because there are few challenges in the current space, and especially for the DeFi. The first of all is security issues. So I've seen many hacks and the rag pull projects in the recent days. So which means they require very high level of expertise to due diligence on the codes, on the security audit, and to help institution to deposit funds and into the underlying projects. So as you see, the best example would be Moonstake. So Moonstake has been centralized, has been a very experienced and managing, the wallet providers. So another different thing I'm seeing recently is also the wallet provider and the wallet integration with a platform, like say Moonstake is a model, has been more popular. So a few other examples, like say Frontier wallets or other, the Math wallets, they are open integration with staking platform to offer the one-stop staking services, as well to offer some other alternative the DeFi services altogether. So that's a different gateway for the institutions. So if we mention about Grayscale, right? So even let's say for Roy and for Lawrence and Al, I believe you guys won't buy Grayscale shares because when you buy, you pay a premium, more than 80%. Somehow you sometimes over 500%. So the target audience for Grayscale projects, Grayscale products trust are not you guys. They are really for a very traditional institution. Why they are paying this premium is for trust. Because Grayscale is fully centralized. They have all the custodian of the Bitcoins. Another thing that even for Grayscale, they never sell underlying assets, right? They cannot sell. So it's even further to enhance so-called the security of the funds. However, we do see people are actually divesting to the different ways of the investment because they realize, okay, I buy Grayscale shares, now I pay 100% premium. I don't know when can I get back my principal. So we do see other alternative projects when Matrix Point is launching an institutional DeFi savings product, which offers the API directly integrate with other institutions to do the yield farming. I think the recent launch is around 200 million USD, which has been closed. And also, as Lawrence mentioned, Moonstake has been over 18 million USD AUM. Maybe it's still growing. So you can see that more and more people is coming to space. But the first step, I think, is to rely on the expert, to either custodian or the very experienced, established, and also with regulated, license or something. So that's what I'm saying. Yeah.
Thank you so much, PJ, for sharing with us. So I once again would like to remind all attendees, all 47 of you right now, that if you have any questions, please do feel free to write down in the Q&A button below. We will definitely go through with it if there's time allowed. And we will have just 2 more questions before we will be answering your questions. So really, if you have any burning questions that you want to ask all the experts right here on how to enter into decentralized finance, please, write down the questions, especially if you are institutional investors. So boils out to my next question. So speaking of DeFi platforms, which we were all, talking about. So how do you see DeFi, decentralized finance platforms such as Aave and Uniswap going into in 2021, since the year is already ending? So Lawrence would like to share about it.
Right. I think we will see the same issue or situation happening with the ICOs in 2007 to 2019, where the scammy or the less performing projects die away, and then you have clear winners coming up. I won't put my bets on any clear winner. I won't mention any names in case anyone going for more from this webinar. But definitely the same trend will happen, and this is where it's tough for a institutional company in this space or people like us in this space for a few years, because every time when projects scam people or are not performing, then the blame become like, oh, crypto sucks, Bitcoin sucks, you guys are all scams, which is why we always hold webinars, which is why we always keep sharing, which is why we try to be more transparent and more legit in whatever we are doing, especially for Moonstake. All our assets are, you can see from moonstake.io. Immediately, first glance, you can see how much assets we are holding. Wallet solution is secure, staking directly to staking pools, etc. But for the gateways itself, definitely we will see a lot more influx of demand, especially with this COVID-19 situation continuing on. DeFi or crypto or blockchain space is where the yields are much higher and much more fast-paced. My only advice to any institutions coming in at this point of time, or you got mandates from your upper management, whatever, please approach experts like Al from Cascadia, like Punjing from a venture fund who's experienced DeFi. because this space is very complex and it is a lot of things happening at a very fast pace.
Yeah, I think I really agree with you, Lawrence. And speaking of that, I think why people do really feel, that they got tricked in, or they got FOMO, or even got scammed by crypto. Actually, it's not really the case. I think the education may be lacking on that. But because you do see that there are a lot of startups, not mention names, but traditional startups, they're also filling at, their own company as well, despite raising, millions of dollars. So like even like the really right now, Honestbee is the best case example, right? So I mean, let's be honest right here. So that I feel that even though most of them are, seeing that they got scammed or stuff like this, because decentralized finance or even crypto projects in general are much more fast-paced. You can see, that whether it's a scam or not just within that few months. But whereas as compared to startups, it's definitely that few years. So I feel that it's like what you mentioned, Lawrence. For them to really go into it, such space that's much more complex, they should really, focus and reach out to people like experts, like what you mentioned, Al, yourself, as well as Pangjin. So, Al, do you have anything to add on regarding this?
Yeah, I think the key point that has been mentioned by yourself, Roy, as well as Lawrence, right, is the keyword complex. With decentralized finance, it's actually very complex. Back to the same question institutions ask, right? How does DeFi actually make money that it can return or generate returns for the investor? Right? We understand how it goes in the liquidity pool and all that, but if you tell them the whole story, how the whole chain works, you probably never get to anywhere with them. So the idea here is it's very complex. So the best thing is to actually work with players like Moonstake, where it's very easy to sort of put your asset there and to generate return, and it's an easy, straight-through process. From institutional perspective, it's easy to understand how it works. And you've got someone that you can speak with to understand how actually the backend process works, right? Versus something like a Uniswap platform, which is more open and is more suited for, let's say, individual and retail players who are willing to take a bet, take a risk, to go in and understand the complexity to do that. So I think coming back to institutions again, which is today's theme, they are better suited to work with players like Moonstake, which is easy, straightforward, go-to platform with someone that can service them directly.
I see. Oh, it's okay. How about Onchain? Do you have anything to add on this?
Yeah, definitely. I think, okay, let's just for the record, my only recommendation for the space is Moonstake. And for the rest of the project, I'm going just to discuss, right? Actually, I truly believe the next stop is Moonstake. I'll share you with my thoughts. So just now when Al and then Lawrence mentioned complexity, and second is about where the yield coming from, right? If we see at the current landscape, the yield's coming from three sources. First, lending. Second is a DEX transaction fee sharing. Third, as we know, is some people say is a scam tokens. Is a token prices pegged to the yield farming. So what we are seeing the next phase is that, I mean, people may forget or they may know, for the proof of stake tokens, they have much larger market cap as what Moonstake is currently doing. They have a relatively stable yields, which is generated from the protocol itself. So I will see there will be a merge from the POS yields part to the current DeFi world. So that's why I'm excited to see Moonstake will be the next stop. And also Moonstake get enough expertise. But I do hope to see more exciting projects coming along. As just now, I mean, also the question mentioned, like, say, how do you see RV and Uniswap? Honestly, I don't know who is going to be the winner. First is that I don't want to give any financial advice, but also we see, even for Uniswap, we thought it was best. Then suddenly, SushiSwap is coming up. Then SushiSwap actually somehow outbeats Uniswap. So at this moment, I think the industry is at a very early stage still. So we'll see much competition. We'll also, as I say, the evolvement and also the merge from the POS part or even other future things. But it's a great time for institutions. The same. It's a great time for them to join. It's relatively to me is like it's end of 2016. So you are going to ride the wave. Of course, now we will see how the Bitcoin, the main crypto space, performing. But so far, as we mentioned, institutions are the strong support for the crypto industry rather than before it's primarily retail traders, which also make industry look bad. But we see the things are improving. Yeah.
Awesome. Thank you for sharing. Yeah, thank you for sharing. So now, before I proceed on to our last question of panel discussion, right? So I'd like to basically ask and remind all attendees once again, if you have any questions, please take this opportunity to write down and have your questions answered by experts right here. So moving on, I'd like to also say for the last questions of today for the panel discussion, what are some of the potential that could join in decentralized finance other than lending? Lawrence, would you like to share about this? Since everybody in this panel discussion is mentioning about Moonstake, so I'm pretty sure you have more knowledge on decentralized finance.
Yeah, the reason why they are mentioning Moonstake is because they are really very established. Like custodians, on-chain custodian is on the verge of being the only Singapore-based licensed custodian, which is really huge. And then Punjing from Ruby Capital, he have already invested in a few DeFi projects, and he has helped the company get a lot of yen. So no pressure at their side. As for Moonstake, we are still new and we are providing safety and service and wallet solution, and definitely we are looking forward to more institutional companies that we can help. To answer your question, actually, the thing about DeFi is that we are seeing a lot of use cases apart from lending, yield farming. I just heard about liquidity auction. At Moonstake, we are focusing with partners on liquidity staking. The interesting portion here, which Panjing and Al mentioned, is this industry is very complex and still very new. And the only worry is, would you want to invest or use a DeFi project that has no project team members on your at all for rewards and transactions and yields? Or would you want to have a more centralized, decentralized projects where you can see the project members, you can see a company supporting it, and then you know where the yields are coming from, you know who's supporting the project. I think that is first the consideration. And secondly, this is where even traditional companies have the opportunity to come in. Even for, let's say, the DBS, definitely they have no experience in the DeFi. So could come into this, will they want to consider leveraging, or let's say staking as a service, could produce a DeFi product and feature. So I think definitely next year we will see a lot of new projects, more complex products with higher yields. But I have a feeling we will see also traditional companies coming in with a DeFi product because they see the market demand.
Yep, definitely. We can definitely see more traditional company coming in, even banks like what I mentioned, DBS. So yeah, Panjing, do you have any take on this?
Yeah, just as when Lawrence mentioned it, right, when DBS has set up the digital exchange, another thing for the exchange is that how can they further utilize the assets that is kind of hold, but not see they move that asset, but basically as what we see Binance or other institutions that have been doing is that they can use it for staking. That's a very straightforward way. So as Lawrence mentioned about staking as a services, is one of a very I would say convenient and safe way for institutions to manage the underlying assets. And especially for this year, Ethereum 2.0 has been launched. So for retail to join Ethereum 2.0 is very, very actually costly and kind of risky, because I think in last week we have 2 slashing penalty cases. So which means you have really been penalty for the retail who set up the Ethereum 2.0 validators. So that's where the institution can help, like Moonstake. And another thing I'm seeing is that, as just mentioned, currently we're relying on lending. Another project called DeFi Money Market, which is invested by Team Draper, is to bridge the automobile loan to the DeFi world. But again, is essentially still lending, DEX, and what I'm seeing next is really about POS yields. So as Lawrence mentioned about, they call liquidity staking, is a new concept coming into the market. So we'll see more and more, but of course, in terms of, I think I also agree with Lawrence is that next year there will be more complex projects. So the yields, when you see, it's over 100, maybe 1,000% annual percent, but can you really capture all of them? Or is a trap for you to join that is require a high level really expert to understand the underlying codes and also to understand the business model. So where they have to rely on the existing expertise to help, especially for institutions, which they are looking at more stable returns rather than a very high risky, high yields. So that's what I'm seeing. So be careful, and of course, to embrace the new changes.
Understand. So, El, what about you from a custodian standpoint?
Yep. So tapping on what PG just mentioned about last point, working with professional experts to do this, right? One of the key things is the trust in smart contract and how they've been engineered. We've got one question, I think, from the panel, the audience as well. Really, the question is, how can other centralized entity exchanges, traditional investors come into this space? And the keyword here is the trust, and in this ecosystem, who can they trust? So when you work with a centralized body like a custodian who then can support an exchange and other platforms, bringing them into the ecosystem, including Moonstake, what we can actually do is we then become the sort of central authority at looking at the smart contract and building it up, and then enabling our wallet infrastructure to interact with a smart contract. And what we do at Onchain Custodian typically is we take a smart contract that we're supposed to build, we go out there and we work with people, for example, like Moonstake, which is one of the top-notch security firm that looks at smart contract in this space, and to make sure that that is audited properly and done properly before we create a smart contract, and then enable at the back end for wallet to interact with the smart contract. So that increases the level of trust and certainty that this project is not what we've mentioned earlier on, like a scam project that is out for quick money with bugs and loopholes that you can actually penetrate through someone else. You could easily siphon off the money. So that's one way to help establish that kind of trust that the industry need. And I think that will be the way going forward. We're not there yet, but I believe more and more DeFi projects will look at this type of collaboration with central entities that are more trusted to kick things off. And then going forward, institutions can embark on this space based on that trust that we've created for the whole industry. That's what I think.
Yeah, speaking of Q&A, so Lawrence, what do you think about the questions right now? The first question, like what El has just answered, how can centralized exchange collaborate with decentralized finance? What's your thought on this?
I think the term decentralized and centralized is a industrial term for the crypto and blockchain industry. In the grand scale of things, it doesn't matter. What users want in the end of the day is higher yields, higher returns, rewards in a secure and trusted manner. So in that sense, if you are a centralized exchange, if you want to focus on the projects that you want to list on your exchange, you feel that project listing will be your main proposition, getting users on your platform is your main proposition. Where companies like Moonstake will come in is we can provide a staking as a service and wallet solutions so that, if you already have assets in, for example, AGA and Tezos, you can use our staking service to get the returns and yields, which you can value add back to your users. So it's an addition to the proposition. For the DeFi portion, even for Moonstake, we are exploring liquidity staking. We are exploring onboarding more DeFi projects. We have, for example, Ruby Capital as a partner for DeFi portion. And we will serve as the gateway for centralized exchanges, for institutions who want to go into DeFi but are not familiar with it. So from a proof of stake, from an expert point of view, gets the proposition comes in.
Okay. Well, Pangju, what's your point of view?
Yeah, I think another thing that, if we mention about decentralized finance and the centralized exchange, the question always coming from, are the people more, for a centralized exchange perspective, they are afraid that liquidity will be, taken to the decentralized finance part. However, actually, I see it's more about collaborative manner. As we see, Binance has been launched a Binance Smart Chain. Huobi has just recently also launched a Huobi Smart Chain. So the CFA actually is going into the DeFi space. And another research report published by the blog recently showing in the past 3 months, we mainly see the transferring out of the tokens from the centralized exchange. So which means people actually currently is more willing to keep their assets in the decentralized manner. However, in this way, as we just mentioned, keep mentioning about risk, the security issues, then we also do see a more and more centralized institution like a Moonstake or Onchain Custodian is offering the services for people to manage their decentralized wallets and to help to manage their funds. So that's, I see, is more collaborative manner. But as just we keep emphasizing and mentioning this earlier of the industry, when the industry is early, so we'll see honestly, the lack of regulations, lack of compliance. Then we see many scammy projects, the scams that come into the market. So as we just, I mean, I also want to label all this, just be careful of the risk and rely on the trustworthy bodies and institutions to enjoy the yields from the DeFi world.
Okay, thank you so much. And thank you, Alvin, for the question. So next up, we have another questions from the floor. We have from Jesse Johnson. Do you expect 2021 to be a year we see great progress towards expanding the cryptocurrency user base? And if so, what's some of the bottleneck that you think may happen? Lawrence, do you want to take a lead on this?
Yes, definitely. Even right now, we are seeing a mass adoption compared to Go 19 or Go 18. The market value, market cap has increased dramatically. Users, even institutionals, are coming in a faster pace with larger amount of money. And as mentioned, even Pornhub, if even with the disabling of Visa and MasterCard, they are using crypto payments as a way to move forward. So I don't see any problems with the update. The bottleneck will come in when prices go down, when the bear market comes, as you can see from the winter of 2019, when BTC prices drop, when DeFi projects are turned out to be scammy projects, and as always, user confidence will become negative, and people start blaming this industry for loss of money, which is unfortunate, which is why we are here. So that even institutionals or retail users understand the risk, understand that there are actually legit institutional companies you can leverage on instead of plunging into DeFi space without any assurance or expert advice.
I see. So, El, some of your thoughts on this?
Sure. My thoughts, it's 2021 will not be the great year that you see a huge expansion in user base of crypto asset in comparison relatively to the years before. The ways that we've been looking at this systematically and mathematically, it's really looking at numbers of, let's say, Bitcoin wallets and Ethereum wallets out there. That's how we estimate the growth of user base, right? Wallet numbers will increase, but really is the usage increasing? That's the question you really want to drive at. We will see institutions come into this space, but I think the real sort of adoption and daily use, will come through when we're able to build bridges, where we're able to transact between things like CBDC and crypto asset. Well, then you have the true sort of fungibility between two ecosystems. I think that's the day that you will see a huge expansion in user base. We're not there in 2021. I doubt so. We will have more initiative around CBDC. We will have more users and platforms building bridges between crypto and fiat, but we're not there yet for CBDC to crypto space. And that's the day I'm waiting for and looking forward towards.
Okay. So, Onchain, what are some of your thoughts?
I'll take it in this way. So basically, let's say when we mention about user base, right? If let's say for me, for one type of user, I think will be increasing is about the traders and who is doing to trade the cryptocurrencies. As Lawrence also mentioned, the Pornhub has been saying, oh, they only accept the cryptocurrencies. I mean, they have been forced people to, to buy in the cryptos that to for use. But I'll still consider it as a conversion or like say just trading buy sell cryptos. And also another thing is that another big development in addition to CBDC, and we can see some forex trading as moving to the crypto space. As naturally, when we buy, the USDT or buy the BUSD, you're actually naturally exposed to the USD, currency exposure. And there is a bank in UK actually as a bank alliance with Barclays, and they are being discussing that the biggest use case for the DeFi or for the decentralized exchange is actually for forex trading, because now currently the forex has been an issue in some countries. And also, let's say in the South Africa, South America, so people tend to use cryptocurrencies for transactions. Is unfortunately or fortunately is basically that. However, in this space, I do believe there will be more regulations need to be in place to enhance the both compliance framework and safety regarding the decentralized exchange. trading, as we see many security risks coming up. Of course, that's today's topic, that you should rely on the institutions and really trusted service provider to see how you can trade, or you want to enjoy the yield farming, or you want to do some investing in the DeFi products, or do the staking. So that's what I'm saying. So I do see there will be an increase of the traders, but if you've seen the real adoption of the blockchain or the cryptocurrency, I agree with Al. It still take years. It's not that fast.
I think speaking from my own personal perspective on it, to answer Jesse, was that I feel if you can really see that there will be a huge user increase, right, is when you can see that the media are starting to report back about Bitcoin and crypto, especially the mainstream media. Oh, DBA is coming in. What's some of the user thoughts on the recent Bitcoin prices? So like what Lawrence mentioned, I really agree. Is sometimes user really looking at prices, which that actually should not be most of the case lah. Which is sadly people are just looking at prices, be it for forex, be it for stocks, or even for cryptocurrency. So yep, I think 2021 maybe a good year to see a huge increase in users. But if you're looking at technological advancement, mainstream adoption, yeah, I agree with Al. It may take quite some time. So yeah, we have our next question, again by Alvin. What do you think is the biggest risk to decentralized finance, and how can DeFi regulations be enforced to build trust in the ecosystem? So let's start with Al first, shall we?
Yeah, so in terms of risk, I think I mentioned earlier on, is the risk of bugs and loopholes in the code in the smart contract. And that's been one of the biggest issue out there when you're staking or doing depots and stuff like that in the DeFi space. And in order to resolve that, when you start looking at a new DeFi project, the best way to do that is go to a trusted entity to do that, or if they're led by certain more well-known people who've been in the space, who's been doing project, who knows their stuff about how to do audit of source code. That's probably easier to manage. And I think that's one of the key risks that investors are thinking upon when they go into that space. And also the use of funds once they are put into the pool. So I think those will be the two key risks that you're facing as an investor. Then from your perspective, Alvin, clearly you sort of look at an exchange. The risk for you to then bring on a project, in the DeFi space into your exchange would then be your brand equity, right? If a project goes south and your retail investors are in there, then clearly your brand and reputation is going to be damaged or hurt from that aspect. But in terms of how regulations will work around this, I believe it's good to have regulations around sort of DeFi projects, and I think that's how it will be, mapped out or done, either around the projects or the firms who are onboarding these projects to make them available to their retail user base for subscription. That is how it will be enforced. The reason, and I think that's important, is because there are a lot of retail players in there, and we clearly don't want to see a 2017 again where people were buying into ICOs and they have no idea what's going on and then losing their life saving on it. I think it's a good thing to have. Well, over to you, Lawrence.
Right. I agree with Al, as in the highest risk is actually the security portion, because these smart contracts, DeFi smart contracts are like wrapping. So there's a smart contract layers of A, B, and C. And unfortunately, we have seen a lot of cases of hacks or money being lost already. So definitely for any institutions coming in, especially exchanges, you have to do your due diligence in the security of the smart contracts, in the technology and the code behind these projects. The other thing that happened, like for example, for Sushi Swap is a very clear example. Binance listed it for free in a very fast pace. The traders on Binance platform was very happy. But when the prices start dropping, when some issues happen with Sushi Swap, everyone was going Binance for it. So as a brand, as an exchange, you need to be careful, because this industry is still very speculative. It's still very early stage, as what we all mentioned and we all know. So the trade, your users are temperamental. So if anything happen, Monday they will say they love you. Then Wednesday they will start stalking you like nobody's business. Right.
Yeah, I agree. So how about Onchain? Do you have any thought on this?
I think I'm 100% with Lawrence and Al mentioning, especially Lawrence gave the example about sushi. I do see a real life cases around me. I got a friend who is far more into sushi when he get listed with Binance. He's a big trader. He put around 1 million USD chunk. Then he's always 250K. So that's a great campaign he made to Binance. So that's something that I know for Binance, the centralized exchange, they want volume, they want liquidity to the platform. But as a trader, we have to be calm and to understand there's a huge risk. Normally, when there's a high potential return, you are exposed to a huge risk. Even for smart contract, as Lawrence mentioned, for RAM, you have smart contract layer. For user like me, I'm not a tech expert. I only use MetaMask. But behind the MetaMask, there are a few transactions. Even as yesterday, the CEO of Nexus Mutual get hacked by his own wallet because the hacker actually used an innovative way to reassign his transfer wallet address. So this given lesson is that do make sure your wallet address before you transfer out the funds, it can be misplaced easily. So that's just as we all keep seeing, as Lawrence and Al keep mentioning, that security risk, and just choose carefully about the trusted institution you are relying on, even the centralized exchange or the decentralized service provider. Also, another thing is that for regulation should be in place to help mitigate the risk of the some team they are behind, you don't know who they are, they have a different raw fake identities. Even for Singapore police have been known for to get back the funds get hacked. So that's what I'm saying, that we need to be more careful and to choose the right partner and then to enjoy the yields. So don't get too formal into the high yields, don't get too formal into the high pricing, that you may end up losing all your lifelong savings. That's what we've been seeing along the way from the market.
All right. So we'll take the last question today. So by Andrew. So Andrew's question is pretty long, so let me read it out again. So his takeaway from the conversation thus far are the overlying use of this word: scammy, scam projects, complexity, trust, trustless, risk, enforceability, hacks, etc., etc. But ironically, these were the very same words spoken by the committee 5 years ago. Hence, what has changed? What are we doing to address this? And over time, we are coming up with fancy products and tools rather than trying to really address the concerns mentioned by the community. So, what are your thoughts, Lawrence?
Let me see. Hey, Andrew. So yeah, I feel your pain, firstly, and that means you have been in this industry long enough. Firstly, the reason why we keep mentioning this is because for retail traders or retail users, we have been in this industry maybe for 5 years or even 10 years. But for institutions, they are actually like babies compared to us. So that's why for me, I would like to emphasize the fact that if there's any new institutions coming, which see a massive update compared to last year, they really need to be careful, because these are the lessons that we have learned through a hard way for the past few years, that institutional experts from the traditional side are not familiar with. Even JP Morgan, even Temasek, they are all scratching their head when it comes to crypto and blockchain, especially now we got DeFi, which is even more complex. But to answer your question, what has happened is actually a lot. For example, Singapore Payment Service Act has been amazing. If you have followed the regulations, they have been very on point and on the ball. Like last year, they started the PSA for the crypto and blockchain in January, and they managed to weave in SEOs by October, which is amazing compared to other countries. Again, this year, they managed to weave in amendments within a year of talking to companies who want to get regulated, DeFi, and empowering MAS with more powers, which is amazing. If you think about it, a government moving at the speed of a startup on a year-to-year basis, they are putting improvements into the regulations. So this will also mean that actually, let's say if you are a Singapore company or Singapore investor, the government is looking after your welfare, which is very different from, let's say, the 2017 period or even before that. That's one. Second is we're having cascading solutions. We're having experts, venture funds who have experience in the highs and lows. We have even insurance products. We have traditional institutions like DBS, JP Morgan coming in. So there's these traditional companies with money, with the familiarity with regulations, who are here to protect investors' interests. Even for Moonstake, why we started this staking as a service is realize, okay, we feel that proof of stake will have huge demand, and it already has, and it will continue to be so. And we wanted to be the expert in this field. And of course, with proof of stake, you need a wallet solution. And then we will also be exploring further features and products related to DeFi, especially because we feel that there will be a need for institutional experts in a certain specific area in order to support the whole ecosystem.
Thank you so much for sharing, Lawrence. So due to the press of time, but I know that I mentioned that it's the last question, but surprisingly, we have quite a few more questions coming up. So I'd like to check with, before I commit, I'd like to check with all the panelists if they're okay to answer some more burning questions from the from the floor. Everyone okay? Al, Lawrence, Onchain?
I'll let Al and Panjin decide.
Oh, good.
Yeah.
I know you guys have busy schedules. So, okay, let me ask regarding institution. I think we have one question that is very interesting. It's from Hadi Azan. So with the rise of family offices, especially tapping into Asia's new wealth, what will your advice be in terms of diversification? Al, do you have any idea?
I'm just reading the question in a second. Tapping into new wealth, diversification. Okay, so this is a question in terms of well, I assume diversification meaning into a asset space like Bitcoin. And I don't really give a financial advice or anything of that sort. But the idea here is that you can take a step at diversifying your portfolio into crypto assets, specifically, let's say Bitcoin, for certain reasons, right? There's a reason why players are buying into, let's say, a Grayscale. They're players who are using Bitcoin as a part of their treasury management tool. Because they look at it as a natural hedge against inflation. And if you think about it in that way, then there is a place for Bitcoin in your sort of portfolio. That would be the way that asset manager as well as family offices could think about it. The thesis behind that, happy to have an offline discussion, could be half an hour, 2 hours around how it actually works. But if you think about it again, just from a investment perspective, right, even if 5% or 10% of your portfolio, which if you look at UBS and Credit Suisse most recent wealth management report, the typical alternative asset class, the allocation is somewhere between that 5 to 11%, right? Based off the 2011's number, 2019's number. So when you look at Bitcoin as an investment tool, that's the angle to go in, at a small allocation of that portfolio that you can get additional alpha or use it as a natural hedge. That will be the idea that you should look at Bitcoin or other types of crypto asset, depending on your risk appetite.
For you, do you have any thoughts on this? Coming from an investor perspective.
Yeah, I would first say this is not financial advice, but basically we've been seeing, the some family office. Actually, I cannot name them, but I do know some of them has been investing in the Bitcoins. So, but they are being very traditional investments that they just buy Bitcoins in their cold wallet and just hold it. Because to them, let's imagine, I mean, as Al mentioned, is actual alpha. Because let's say from this year, if you buy Bitcoin at 12th March, of course, that's a huge gain for you and more than 5 times already. So imagine just allocate 1% of your AUM, it gives you around actual 4% of the returns, or even as you buy more. But for the family office, you revisit your portfolio mandate. Let's say every year you're looking at 5 to 10%, that you can allocate accordingly how much should be allocated to Bitcoins or Ethereum or Grayscale products. That really is subjective. But as I mentioned, I don't want to name any family offices, but I do know there are a few family offices even doing a fund for the staking as a services and to earn the stable yields. Because in the current Singapore market, the deposit rate for the USD, I mean, to be honest, is near to zero. Just forget about it. But in the lowest return of the DeFi, if you're looking at very stable yields with a trustworthy, let's say a company called currencies, they have been also establishing a new yield farming protocol. They give you at least 3%. That is much higher than bank savings. But of course, in the meantime, again, as we keep seeing, I mean, pay attention to the risk is not ironic or is not very old way to see that, because we are the one who has experienced the loss of the funds. We have seen the traps. We have been seeing the scams. So we keep telling the audience, especially for the retail traders part, that you must be careful of the risk, because once it happens, you will lose a lot. Of course, I do hope nobody will experience what I have experienced in the past. So that's the reason I keep emphasizing the risk, and also to try to help the industry to grow better. Yep.
And if you're a family office looking to invest in this space, I suggest you highly speak with Ruby Capital about what you should do with your funds. That's a good way to do it. And I believe at the back end, then PJ could work with players like Moonstake to see how to deploy your funds. So this also addressed Andrew's earlier question, what has happened in the last few years, is that instead of working in silos, we're now seeing serious players like ourselves coming together to formulate projects and solution that is a one-stop shop for clients and family offices to deal with us without having to do their own management of the private key, how to farm, how to stake, and how to do everything else, and get professional advice from, let's say, fund managers and capital houses on what to do next. Back to
All right. So Lawrence, any last words on these questions?
No, I'm seeing a lot of questions. I think we are running out of time. Actually, we have already overrun. So thank you so much, everyone, for the interest and demand. And again, thank you for my fellow speakers and Roy for being here. Even for myself, it's been really fruitful, especially hearing from the experts in Cascadian and experts in venture fund. And really happy to be here.
Yep, thank you so much, Lawrence. And also thank you everyone for joining in on our quickfire panel discussion. And also thank you Elle and Onchain for being one of our panelists as well. So if you have any additional questions or any questions that I have not managed to address, or if any panelists have not managed to address as well, please drop Lawrence an email. And you can find his email basically on the quick chat button below that we will basically already put it in, or simply refer to your Zoom registration email for Moonstake's contact details. So thank you everyone. Thank you for joining us, and have a good week ahead, and see you guys next time. Signing out.
All right, thank you. Bye.